Good morning, everyone. Welcome. Good morning. Welcome to another week, another day, another live stream, and welcome to all-time highs. The point in trading futures that you just don't know what to do at times, because is it going to go higher? Is it going to reverse? We just don't know. We're going to be talking about all of that today, so stick around, hit the like button, subscribe, and we're going to have a good time here. If you're looking to take your trading to the next level, you can do so by using the code DTJ. You can get anywhere from 30% off to 80% off your next evaluation account. It's a great way to add just a little bit of risk, but without selling the whole cart, so to speak, without putting all of your eggs in one basket, so to speak, when it comes to your personal account. So it's a great way to add risk and continue to learn day trading, to learn how to trade futures using ICT concepts, which is what I teach in this live stream and what I teach in my course. So with that, let's go ahead and open in prayer. Thank the Lord for a wonderful past week. Thank the Lord for a wonderful weekend. And I pray that you guys are all doing well today. So Father, we just honor you today. Lord, I just thank you for your goodness and kindness. Lord, I thank you that in and through all things, Father, you are using every set of circumstances to draw us closer to you, to make us more like you. And so, Father, I know that we don't have full eyes to see everything that's going on, but Father, we trust your leadership. We trust that you are directing our steps. Father, and I thank you that you've given us eyes to see, understanding of the market. And I pray that we'd have wisdom to use those insights, to use the insights and the lessons that we've learned so far from our past experiences and from the lessons from others, that we would be able to apply them to this market. So, Father, I pray a blessing over everyone here, that everyone here would see increase in their relationship with you, and they would see increase in their economic circumstances. In Jesus' name, and everyone said, amen. Amen, amen. Good morning, all set. John, Crewman, John B, Marsalo, Maria, Monochrome, Charles, Gabriel, One Pocket Slim. How are you? Wendy, good morning. Did I say Wendy already? I don't think I did. Octavian, good morning. Ricardo, what's up? Eva, good morning. Tony, what's up? Matthew, welcome to new all-time highs. You know, to be honest with you guys, when it's at all-time highs, the first thing that I thought about is going over to gold. Because we are not at all-time highs, and we've ranged back and forth, and it would probably be easier to mark out levels. That's the hardest part about all-time highs, is that we're in to a degree at no man's land. But we're going to exercise our standard deviation conversation that we had Friday, and we're going to see if we can pull some standard deviations and use that to kind of pinpoint where the market may move. So as I do always, I mark out my previous week high, previous week low, and midpoint. You won't see it on the weekly, but you'll see it on the daily. We're about to end the month, okay? So we're about to end the month. Honestly, guys, here's the reality. We started the month of June down here. I believe the markets are algorithmic based. I believe they're rigged. That's my personal conviction. You can believe it or not, it doesn't matter. You can still take the same principles and concepts and trade them, because that's just how it is. But if I go off the premise that the markets are already rigged and the markets are already planned out on where they're wanting to go. If June opened here and the last day of the month we run all-time highs, I'm expecting it to be choppy. I'm expecting crappy markets. I'm expecting it to not be very good because the higher time frame objective, the goal, has been achieved. Correct? I mean, if you're trying to think of a start line and a potential finish line, the start, the opening of a candle, and a close of a candle, maybe not even the close. Let's talk about the high. If there's a start and a potential finish with an algorithm where they have a goal for it to reach, would you not think that all-time highs could be a big one? That's how I see this, right? That's how I see it. I mean, look at this giant wick that went lower. This is a monthly perspective. Let me drop to the weekly. I need the NQ1. We're going to go to that real quick. Look at the weekly and this wick right here before it started moving higher. What did it run into? The last fair value gap before it changed directions. Oh my gosh, I'm sorry guys. There it goes. There it goes right there. We didn't get too far into it. All right, so if you look at the weekly time frame, how far did it go down before it started pumping towards all-time highs? Well, surprisingly, maybe not, it runs to the last fair value gap in this price leg. Why didn't it run for that swing low? Because it was rebalancing an inefficiency inside of a price leg, an internal swing low, and running for external. So we've done that. We've achieved, in my opinion, the goal for Nasdaq. Now the question comes, are we going to roll back and stay inside of this range, which would give us opportunities, or are we going to chop around and not have very good price action? Do you see what I'm saying? So that's kind of what we have to consider. With that in mind, if I'm going to bet on something, I'm betting on higher prices, not lower prices. We've tried to bet on lower prices before. We had a great run right here, which was really nice. Played that short, multiple times on Friday. But then guess what it did? It swept below. No, what did it do on the hourly, I think? It came down to a certain point, and then it went back up, chasing all-time highs. So we are currently sitting at all-time highs. Now, the all-time highs on the NQU levels compared to NQ1 or the continuing contract is slightly different. So you're not going to have the same levels. Oh, well, it does show it pretty close. 87325, 87125. So it's about 2 handles off the difference between the contracts. So it's still pretty close. So from a daily perspective, where could price go? Well, Friday closed bullish. So if I'm going to continue to have a bullish attitude, I would want to see it stay above the midpoint of Friday's range. That's why Friday's equilibrium is such a desirable target, because you'll see it run to that midpoint and then bounce off of it. So we have Friday's midpoint. That is my factor on, does price want to roll over and move lower? Doesn't mean we can't get some shorts towards here. We're just going to have to look at price and make sure that it is in line with price moving lower. But overall, I have a bullish sentiment. Now, we did hit a key level. So when I'm saying that I have a bullish sentiment, it doesn't mean I'm looking for a long. I'm just saying that it's hard to want to move this direction when you've seen all of this. Now, could we get, because we hit our key level, could we get a nothing burger candle? Could we get maybe a candle like these right here? That's probably more likely, is to get something like this, some form of consolidation. So we may run higher, we might run lower, but they might not be they might not continue. So you could catch yourself wanting to go lower and lower and lower while it's dropping aggressively, but then it just turns back on you. Okay, so you got to be careful. We're going to have more ranging price action. I mean, take a look at price, how it has been on the 1 minute time frame. We got 2 minutes till market opens. Up and down. It's not bad, but it's just up and down. It's back and forth. This is where a lot of, if you're not careful with the kind of conditions that we're in, you're going to take an inversion short right here, and it's going to run against you. You're going to take a breaker long, and it's going to run against you, right? You have to be very careful and just take small bite size and don't get picky, okay? So with that in mind, I've marked out our my new week opening gap high and new week opening gap low, and we just need to mark out. I'm not going to get our 930 because I've been talking too much. I like it. I like the 930 model. I'm not going to be ready for it, and I'm not going to rush it. So I will not be taking the 930 model just because I don't have anything open yet. We had family in town, late night, late start. So I'm going to get a feeling for the market before I take anything. Let's see if I'm right, though. Let's see if it would have played out. Of course, perfection. Perfection. Okay, so let's go ahead and mark out our 930 price, and we will mark out our opening range gap. All right, so opening range gap aligns with the new week opening gap. That's pretty typical. But do you see how we lost everything on that? Even this push here, we swept the low, and what did we do? We lost all of it. Midnight open, let's mark that. We have not tagged that. Where is midnight open? Did we already tag it? Oh, we might have. Interesting. I still need to open everything, so give me a second here, folks. Previous day high would be a nice area to pay attention to, and our midpoint of the opening range gap. I'm confirming that ES is at all-time. ES has not hit all-time highs. That is another reason why I would probably lean more on the bullish narrative. ES has not hit. We're going to let this sell-off happen. That's totally fine with me. Here's our first presented fair value gap at 932. If we get an entry in the next minute, that's actually not a bad entry. I just don't like that previous day highs right there. I backtested 932. Actually, I believe I'm doing it right now, and it's been playing out really nicely. The best days that these play out amazing is when we have 8:30 news. We don't have any 8:30 news, so it's more of a 55-45, but it would need to do it on this candle here. I have expanded it a little bit to like 940 to see if it would actually play out, and it has, but it doesn't look like we're going to get it right now. Carter, good morning. Did I take that Friday 3 p.m.? I did. It's my favorite trade. If I take a look at the charts and I see if I see a 3 p.m. Low of day, I'm taking the 3 p.m. reversal. It's a guaranteed trade. There's no question. I see it, I take it. I don't even question anymore. It's like a 75% win rate. It's amazing. I've had this Fridays actually would have had a loss first and then an execution, but I didn't take that first one because I knew the market was dropping. We'll go over that. How many of you guys would like to see me talk over the 3 p.m. reversal? If you got, we'll go over that. Yeah, if you guys are not on or have not taken the 3 p.m. reversal, or don't know much about it, I've done a few videos on it, but guys, it's amazing. It's amazing. Okay, note how we did not take out this low. This would have been Asia low right here. Oh, we did not mark Asia low. We didn't mark Asia or London. Okay, there's Asia low. Okay, we stopped right before it. Asia low high. Where's London? Yeah, London was way over here. We already really ran through that right off the open. Okay, so we got our London low and highs. Here's our first presented fair value gap. This would be a trade. And for the sake of it, I'm going to take this if it closes in here. This would be a short. I'm not doing full size. This is going to be a single micro contract that I'm taking on the close of this candle short because it's a model I've been testing. It's not completely formed out yet. The rule is I'm in the short right now. I don't have my stop losses. I'll put it up here. All right, so in that trade right now, here is the rules for this trade. The rule is from the entry, you target one standard deviation from your stop loss. So stop loss is candle one's high. That's 39. So then you would target 39 over here for 39 handles. This is what I've been back testing right there. Okay. So that is the stop loss. And I'm going to take it and see if it plays out. I'm doing one micro contract. Why am I willing to do that? Well, I'm willing to do that because one, we've hit all-time highs. Two, we have a ways to go with the new week opening gap down here. We have Friday's midpoint down here that is also draws on liquidity. I'm still very bullish, but this is a signature and price that I've seen and I've been testing. It's not fleshed out with lots of data yet. Okay, that's why it's only one contract for me. If this was the 3 p.m. model, I'd be loading it up right now. Okay, I'd be packing it on thick. But this is not that, okay? So this hasn't been tried and trued as of yet, but this is the trade that I'm currently taking right now with one micro.
Order submitted.
Okay, put in my stops there. And my target is down here, 796. Or, 96. No, is that where it is? Yeah. 796. Does that overlap with the swing low? It overlaps with the fair value gap. So let's jump to the 5-minute time frame and see if there is a fair value gap down here. Yeah, we got a 5-minute and a breaker. Okay, here's the breaker right there, and that's in line. Perfect. I don't mind that at all. Let's just see if it actually wants to move that direction or stop me out. So 796 is going to be the target.
Order submitted.
796. There we go. All right, so one standard deviation for this play. But that is the rule for what I'm backtesting inside the community. Okay, so anytime I'm doing any backtesting, I'm posting my results, sharing the progress inside of the Discord. If you want to be a part of that community, you can check that out. But you guys are getting a little taste of what I am doing there. I did a live stream for those that are in the Discord. I did a live stream if you weren't able to join where I was backtesting all this, going over all the details. Thank you, Vintage Trader. Yeah. Some of the old videos are rough, but they're also good. There's some good ones. I tried to always improve the quality of the videos and the content. Quality visually and quality content-wise. Yes, Johnny, 2:30 is the time because 2:30 can't if it is sweeping a low, the low of day around 2:30, that can be and has in the past been one of the most explosive retracements. The 3 p.m. was an exception yesterday because that was an aggressive retracement after a huge drop. But if you get a 2:30 sweep of liquidity right around 2:30 and you get that inversion, if it's not in a sell model, that can be in a very explosive retracement or reversal. So yeah, and I don't always do it because I'm not always thinking about it. So you can check at 2:30, you can check at 3. Any time in between there, it could also give the reversal too. So just remember between 2:30 and basically 3:15, you're looking for that. So the only reason I might close this early is if we sweep Asia lows, if we tag Asia lows right here and we have a reaction to it. Johnny, usually it's 5. Yeah. So I mean, I'm not gonna lie. I've done if it's a fantastic move, and I'm not in any type of drawdown, I'll go 10 micros. So I have a risk management rule that if I take a loss, that I will not increase size at all, because that's the last thing you want to do is increase size, is after you have a loss. So I'm watching Asia low right here. We just created equal lows. I'm not a big fan of that. If we inverse this, it might be worth considering closing it, because we just created equal lows right there. Creating equal lows can act as a reaction point for a later draw on liquidity. So we'll see if it fails and doesn't run this inversion right here, or run this fair value gap. We want it to find resistance to that fair value gap right there. We have the 15-minute candle has closed. So it does make sense for a retracement right here. We just had a close of a candle, the 15-minute candle. So think of power of 3. If you're down here and you're going to see lower prices, which direction should you see it go first? Okay, we just had a 15-minute close. If we're going to see lower prices, which way, based on the power of 3, will price go first? It goes up for the manipulation. So we got accumulation, manipulation, distribution. So when you see price go up right on a new 15-minute candle, you shouldn't be freaking out. Okay? For the most part, you shouldn't be freaking out, because that is how price moves. When you see it going against you on a brand new candle, go, okay, I should pay attention. It could go against me, but right now I'm going to treat this as the manipulation because I still see my target lower. I still see reasons for it to go lower. I want to see it go lower. So accumulation, manipulation, distribution. Well, we just saw two green candles. Two green candles wanting to move higher. That could have been enough for the manipulation. And now we see the expansion lower. This is power of three concept and what you constantly have to make sure you're understanding so that you aren't getting freaked out when it's going against you like that, right? You shouldn't be freaked out. There's a slap of Asia lows. And let's see if we get one more push. If we don't, I'm going to close this trade. I'm going to close the trade for me. That's how I can view that, is as a manipulation. Like, could we go lower on a 15-minute candle? Yes, but we also could go higher, and my target or a nearby target was hit. A nearby point of liquidity was hit, so I'm going to take that. I'm not going to sit through and have to go through all that drawdown in case it come back all the way up here, right? I don't need to wait for that. Could it go lower? Yeah. I mean, we were within 7 handles. 7 handles of the target, 8 handles of the target. That's fine. I'll miss out on $20. But that was a good trade. That is one of the models that I'm testing out to see if it turns into something. And so far, it worked out great. This is top right corner. This is the Nasdaq NQU 2025. Santos. All right, so there's one winner for this morning. We'll see if anything else happens. But that's basically what trading is, folks. You back test something, you see that it works, you see it in the live price action, you take the trade. When it's done, you don't take anything else. You wait for another model that you tested to show up. And if it doesn't show up, we don't take a trade. Sometimes I have been victim to impulsive trades. I have not hidden that at all. I'm a growing trader as much as you guys are. Five-minute time frame. We swept and came into... Actually, I bet you even... that's even better. Here's why I like this. Here's a 15-minute fair value gap right here. And there is another one lower that we could honestly move down into. I do like this is my target still. I'm bullish too. I'm bullish too. If you were here for the back testing, guys, for those that are in the Purpose Driven Trader Academy and part of the Discord, I was back testing. And for those that know, I've been here long enough. My brother, he jumps on stream every once in a while. He trades. But he was on the back test with me, and we were freaking out. Because when we have a 932 fair value gap and we do this, oh man, and there was news, we have a data low or data high, it was explosive. One of the back testing trades that I took, it was a $3,000 win with one micro, with one mini contract. It wasn't a mini, I did minis, not micros for the back test. It was $3,000. It was a huge, huge trade. And we were like, this is insane. I was telling him, I'm like, I think I'm more excited about this trade winning than I have been on just winning a normal trade live. What fade markup, BC? I'm not sure what the fade markup indicator. Are you talking about my long and short positions when I did this right here? Yeah, John B, that was all back testing though, so it wasn't actually real cash. My red dot. Oh, the red dot is it's right there. It's on the top. You can't see it. It's under cursors. It's the on the tool panel. It's the top one. Hit the caret symbol, and you'll see that symbol right there. So we are in 15-minute fair value gap, finding support. We swept Asia lows, and we're at the midpoint of the opening range gap. If we're bullish, my intention is that we don't fill in the opening range gap right now. Okay? If we are bullish, I would like to see this remain unfilled. That would signal a lot of strength still. If we go to the 30-minute time frame, we swept. I mean, this looks great for a retracement, a manipulation leg. So here's our accumulation, manipulation, distribution. That's how I'm looking at this right now. So we're really watching that level right there. You can also see it on this candle right here on the hourly candle as well. It's also a breaker. So there's a lot of reasons why it could find support right here and move higher. We'll see what it does. But no trade set up right now. Also, if you look at ES has not hit its all-time highs. So all-time highs is still in the cards for ES. And so we expect it to actually, I would expect it to hit. Okay. We have relatively equal highs over here as well, and all of this is a lot of liquidity that it doesn't make sense for ES to run all this way and then not get it. So if we're patient enough, we should be able to take a nice long. While we're waiting, let's do two things. We're going to do our daily affirmation, and we will take a look at the 3 p.m. reversal. But before we do, I need to hit 70 likes, folks. That's the cost. That's the cost. Is your affirmation that I'm doing well. Honestly, I get a lot of crap sent all over the place and a lot of good feedback too. But this tells the algorithm that I'm doing something right. So if you could hit the like button for me, we'll do our daily affirmation and we'll look at the 3 p.m. reversal model from yesterday and we'll talk about how that played out. I knew somebody out there, John, was like that. It's a contingent like. Contingent likes. The opposite of what unconditional love is. That the Bible talks about. So hourly closes here in 3 minutes. And we're at the 10 a.m. macro, so we're watching that play out right now. We have a sweep of all-time highs. That's nice. We have 9 a.m., 9:30. So we probably had a 3-minute. Let's drop down to the 3-minute time frame. Here was our 3-minute fair value gap. So we had a 30-minute reversal that played out as well. Okay. Where did the 30-minute reversal play out? First off, we need to understand that we hit all-time highs. Okay. We also need to understand this 30-minute time frame. Let's go to the 30-minute over here. You also need to understand we had an SMT. Okay, so SMT from ES to NQ. Right? So we are reversing. So then what did we do at 9 o'clock? We swept this high. We swept this high into an order block. Nice. One hour, or that's a 30-minute sweep. Okay, so once we have the 30-minute sweep, we drop down into the lower time frame, and starting at 9:30, we look for a 3-minute fair value gap entry. Well, the 3-minute fair value gap entry was the same entry we took for the 9:32 entry. There's our 3-minute fair value gap. 3-minute fair value gap, and then it moved lower. So we also had a 9:30, or excuse me, we had 3 models that I trade, or at least some I'm testing, play out today. The 9:30 model played out beautifully. 9:32, we took that trade, and then the 30-minute reversal, which is another model that I teach, all played out this morning. So what does that tell you? If 3 models play out and some of them are overlapping, what does it tell you? It tells you that the most important thing is narrative and direction. If you got the right direction, you could take the peanut butter and jelly entry and probably make money. You could take the caviar setup and you could probably make money. Somebody could name it whatever they want, and as long as they got the right direction, you're probably going to make money. So it tells you that, yeah, learning an entry model is important, but you really need to make sure that you can read price action and know narrative, bias and narrative. That's more important than an entry strategy. You could make your entry strategy could be as simple as a fair value gap entry. That's what the 932 was. 932 entry, that was simply an idea based on the opening pump or dump, which it was a dump off the 930, taking the first fair value gap off of 932 if it presented, and you just take the entry. It worked. It also worked because the narrative and the direction potentially, I told you I was bullish, but we did hit all-time highs, and there could be some type of manipulation lower before we move higher. We had an SMT over here too. I didn't, now to keep everything above the table, I did not note this or see it beforehand. Okay, I missed this, but now as I'm going back, it's like, oh well, there it is. That worked out great. Do you see what I mean? All right, we need 10 more folks, 10 more likes. Ooh, I'm getting hot. No, I don't think so, Tony. We didn't get up to the London lows. So if it, I wouldn't consider it a propulsion block. One more, one more, one more. Brett, 100%. I can go into that. I do that a lot. I have these three on there because I think there's value in each of them in different ways. Before I do, though, we hit our like count. So let's go ahead and do our daily affirmation here. Let me pull it up. All right. Also, if you haven't read the new article I dropped, check it out. If you like combining biblical principles with trading, I do a lot of that on my articles on X. This is how to turn lemons into lemonade in your trading journey. It's based on 2 Corinthians chapter 4, verse 17. It's a good one. All right, here's our daily affirmation for today. I finish what I start. I don't coast. I don't quit. I stay faithful to the end. Let us run with perseverance the race marked out for us. Hebrews 12, chapter 1. Run the race set before you. Obviously, the encompassing narrative of this verse is running the race of your walk in Christ, walking as a believer, going and accomplishing out the what he's asked us to do to make disciples in the nations, right? That is what our assignment is to advance the gospel. For me, day trading is part of that. It is for me. You have to answer that for yourself. It is for me. I was blown away when I came across people's messages to me saying that they're pastors, youth pastors, and missionaries here in the States and across the world. And I honestly was really touched that I could be a part of their journey to advance the gospel. So for me, I'm living this out. I'm living this out. Am I non-denominational? I think I would be considered, not me. I would say I'm non-denominational. I really don't care about denominations. But the church I attend, I believe, is an Assemblies of God. I think. Honestly, I don't know. I look at the fruit. When I'm at a church, I look at the fruit, right? I look at the fruit. I look at the character. And then, in line with that character, I need to see what I see in the Bible. Signs and wonders. I need to see people healed. I need to see testimonies of financial breakthrough, testimonies of miracles. I need to see that. That's part of the fruit. But that alone, without character, that's not good. So you got to have both in hand. And if that's in a Baptist church, well, then I would say I'd be going to a Baptist church. The American church, unfortunately, in my opinion, has leaned more into fancy and persuasive words instead of power. I mean, in Paul, is it Paul or Peter that talks about that very thing? It's not about as many words as you can say, but it's about the power of God. All right. With that, we're still waiting here. Nothing's really happening. So let's go ahead and take a look at 3 p.m. yesterday. Wow. Tyler, that's 3 p.m. Look at that trade. Woo! We'll break it down a little bit, okay? So first off, when we are seeing price aggressively drop like this, okay, first thing you need to do is mark out the low of day. And the low of day, I believe, was right here at 9:30 p.m., okay? So you're going to want to mark out your low or high of day, current day, to see where price is currently at, because this model is based on it running the low or high of the current day, okay? It's not triggered unless we are at low or high of the current day. Now, you can look further left and find other key levels that price may want to sweep. In this case, we have a 4 p.m. low. Right at 4 p.m., we have this low here. At 2 p.m., I really like this level right here. Why? Because it's the top of the hour. Okay? 2 o'clock made that low. Whenever I see the top of the hour make a low, that is an area I would want to note. Okay? So if we take that 2 p.m., and I don't know if this is going to overline or not. I have no idea. All right, so there it is. We sweep that. Okay? This is where one of the trades would have failed. Okay? So once you run low of day, you now have permission to look for an inversion. If it's between 2:30 and 3:15, this is LOD, low of day. All right? And we have our times marked out from 2:30 right there to 3:15 right there. Okay, there it is. So this is the window that price needs to give what I'm looking for the reversal. Price runs this low of day right at 2:30, and boy oh boy, guess what? I'm looking for that reversal right away because I know 2:30 can be explosive. Okay? We have this right here. It doesn't break it. Okay, so now we're waiting. Now, as soon as this happened and we didn't get that inversion, I personally would have been cautious because it was clear to me we were getting a sell-off. When we're in a market maker sell model, it is more likely for the 3 p.m. reversal to fail. So as price runs lower, we run another 2 p.m. low that I would have been eyeing. I didn't start looking at the charts. Actually, I was in a short here. I'm not going to lie. I was taking a short here. Okay? It wasn't one continuous short. I was taking scalps when we were doing that right there, okay? So I wasn't even thinking about the 3 p.m. And I didn't even look at this right here. If I did, I'm not sure if I would have taken it or not, but that would have triggered your entry. Okay? So this would have been the long, and this is where your stop would be, and you would have been stopped out for 43 handles. Okay? But my rules also indicate that if you get a second inversion after a new low of day, you can take that if it's within the time frame, because I've had multiple times where it'll fail the first time and it will work the second time. I've also had one trade out of 2 years of backtesting where it failed twice in a row. Okay? So it gave an inversion signal, it failed, gave another inversion signal, and it failed. Okay? I've had that happen once in 2 years of backtesting. But I've had it happen multiple times where it failed, ran lower, gave an inversion, and then it worked. Okay? So that, with that idea in mind, as soon as we make this low, I'm eyeing where does price want to go. And honestly, this consolidation gave me more confidence about a move higher. It wasn't just straight up dropping. It was consolidating, preparing for the reversal. So I like that as well. So we made a new low. There's the low of day. Oops, that's not drawing liquidity. And now I'm looking left and I'm marking out where our inversion fair value gap is. And that happens to be right here. Our first one is right there. So your entry is on this candle right here. 304. That's your entry. Stop is low of day. That's 40 handles. So you need to make sure when you're taking these types of trades, you understand where your stop loss is before you take your trade so that you can properly size. Because if you take too large of a trade and it happens to be the day that it fails, you don't want it to hurt that bad. I mean, 40 handles already is a lot. So if I did a regular size, I'm doubling my loss, what I normally would take. Because I normally will take a 20, 25 handle stop loss. Okay? So now you would have to look left. You have multiple options. You can take the easy target, another easy target. This was probably the one I would have went for right here. Why would I have gone for this one? Because we would have had a 5-minute order block right here that I thought that we might reverse against. So you could have targeted that high right there, which would have been 60 handles. And that would have been a 1.5 hour trade. We went much higher than that. You could have targeted those highs for 100 points. And that would have played itself out nicely as well. But this model doesn't happen every day. It has happened frequently, surprisingly. It happens probably once a week, I'd probably say. 3 times a month. A couple times in December and in the winter months, it would only happen 1 time in a month. But when it does, guys, it's such a great setup. Go back and back test it yourself. Do not take this and just it's a 1 minute time frame only. 1 minute time frame. Go back and test it yourself. Go back in price action and find out for yourself. That was yesterday or Friday's beautiful setup. That was the winner. That was the winner of the day. All right, so we retagged London low. If we go to the 5-minute, you're going to see a nice little breaker right there. So there's a breaker. High, low, higher, high, breaker. I'm not interested, to be honest. This 5-minute candle right here is taking away that interest. And look where it closed. It closed just shy or just in line with that 5-minute fair value gap right here. So could price reverse from this? Absolutely, it could. I'm not interested in it though right now. So no, Johnny, I don't. I do from time to time put it in the Discord and tell people, are you guys taking the 3 p.m. model or 3 p.m. models showing up? I'll do that for people in the Discord. That's probably the only one that I signal. There are times that I'll ask if people are taking the drop or if people took the breaker. But I will not do an emergency stream for that trade because I'm not a signal service. Signal service, I am adamantly against. Because my goal is to empower you to be profitable independent of me. Now it's cool to hang out and stream. That's completely different. Traders will do that all the time. But my ultimate goal is for you to be self-sustaining. And you will never become self-sustaining if you're waiting for me to call out trades. Liam, you can back test the 5 minutes, see if it works. I just haven't back tested it. So my model is based on the 1 minute. Sounds good. Brett. Was it Brett? Brett, you still on? My opinion of Tradeify is I only would use Tradeify if you're looking for a straight to funded account. That's what that's the idea behind Tradeify. Is you got options for the lowest evaluation cost, options for the overall lowest funded account cost. Take Profit Trader is $120. Apex is for a $50K account is roughly $160. And then Tradeify gives you an option to go straight to funded, which can be $300, $400, $500. But if you're consistent, you can do that. The only thing with Tradeify, so right now I'm not trading a Tradeify account personally because I have my small account. To me, it's very similar. So I could either trade my small account and have proper risk management, or I can go to Tradeify so I'm managing my risk more appropriately and following those rules because I don't quite have the self-control to manage my emotions. That would be why you would do a Tradeify account over a personal account. If you have $5,000 in a personal account and you can't manage your emotions, well, you're going to burn through that $5,000. If you have a Tradeify account, well, the max you're going to lose is that $300, $400 before they're going to require you to pay again to try again. I'm not interested in this drop right now. Look at all the consolidation that we were seeing in here. Ever since we hit Asia low in this 15-minute fair value gap, we've been consolidating and just kind of ranging back and forth. And look how tight the candles have been. I'm not interested in that. Okay? So if you're sitting here going, man, he's talking a lot but not about the charts, well, that's why. And you have to become okay with sitting and not doing anything. It's frustrating. No, I'm not trying to keep you on my stream longer. I would like to take a trade and be done, right? We did take a trade, but I only did 1 micro on it. Would have played out nice if I did full size, but I haven't fully vetted that model yet. So I don't want to just throw money at something that I don't have extreme confidence in. Luna, is that, can I say Luna? Lunu? Loon. Lunwara. Sorry, I like to say names correctly. Maybe it's not even your full name. What am I looking for? I'm looking for price to not be high resistance. High resistance is a lot of back and forth, lots of wicks, lots of bodies overlapping with other bodies, not moving cleanly, but kind of going back and forth. So I'm waiting for that to end. I'm also looking for the power of 3 or AMD. That is looking for, do we see a manipulation of any kind? Do I see smooth highs, smooth lows? Do I see a swing high, swing low that we grab aggressively and start moving the other direction? If we see that, that gives me a sign that we could be running the other direction for liquidity. So the next thing I do is I look to see if there's any liquidity for us to grab, and if there is, that would give me an idea of a trade idea that I can take. But right now, we don't have anything clear. We're consolidating back and forth. So what patterns allow you to do? Patterns allow you to, patterns or models. So for example, the primary model that I like to trade is a breaker. High, low, higher high, break of structure, market structure shift, change in state of delivery, back up to that swing low or the breaker to take my trade short, to take that trade right there. Okay? That's my primary model. This is right here a pattern. What patterns allow you to do is start to see when a potential trade setup is available. But the pattern alone will get you in trouble. For example, here's a breaker right here. Is it going to play out? I don't know. There's a breaker right there. Am I going to take it? No, I'm not. Why? Because I see all of this around it. I don't think the market conditions are going to fare well for this breaker to play out in a way that I would want it to. Maybe it gives us 10, 15 handles and you could scalp it, but then you start getting into taking every time, and there's going to be times it doesn't play out. Okay? So I'm not interested in participating in the consolidation of price. That's why patterns alone can get you in trouble. But it's a starting point to be able to recognize how price is moving. Here's another breaker that played out beautifully right at the open. This is something, besides it being 930, let's pretend 930 wasn't there. If I saw this price action, it's leaving fair value gaps here, 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 here. Price is not in high resistance. It's moving nicely. It also ran liquidity right there, okay? It aggressively displaces. We come back up into this fair value gap, which is also where the swing low is. Fair value gap on the left and right. Breaker, boom. So we had the same pattern, but in a different market environment. Market environment is short term. It was only a period of time right before 9:30 that it played out in a beautiful way. So you got to take your patterns, your model, and it needs to also align with market conditions. Okay, so this is a market condition and circumstances that I'm not a big fan of. I've been burned too many times. I've been hurt immensely. That I've just learned when I see price action like this, I stay away. I've seen it play out before, but I just count that as like it's not my setup. I have things that I want to see happen, and it's not happening right now. So I'm not going to try to take this breaker in all of this consolidation right here. Okay? So you have to bring patterns and market conditions together to accurately trade. Does that answer your question? Lunuwara. I'm sorry. I feel like sounds like I'm making fun of your name. I'm not. I'm just trying to pronounce it. I like this breaker. Gold has a breaker for an upside move right here. I like that big wick at 6 p.m. I'm on the 1 hour chart. See how the breaker failed? Breaker failed. Here's gold. Gold has a low, high, lower low on the hourly. Broke higher. We're right back at that breaker from an hourly perspective. I like that. The bodies wicked into this fair value gap and closed above it. So overall, I would say we should move that direction. I could see it reaching down here, though, if it wanted. That's what you'd have to be careful for. All right, it's 9:30 right now. I'll be right back. Give me a second, folks. All right, folks, back. My wife made some muffins for breakfast, so I had to get me one. And guess what? Nothing's happened. What's the correlation between Dixie and the Nasdaq? Typically, if the dollar is going down, the indices are going higher. If the dollar is going higher, indices are going down. Typically. What's up, Johnny? Did gold already go up? Yes, it is. And it ran for equal highs. I would stop there. Actually, I could see this pumping through these highs. So when I see a shelf like this, a simple term, flat, I don't see it reversing. What I see it is coming back down to this breaker here. Maybe not even get there. And then go like this. That's what I see it doing. And it may not even reach all the way down there. But that's probably what I see happening with gold. That would be the idea that I would be trading. I need to get better at taking gold moves. Let's see. Gold, 1 minute. I'm going to take a micro on gold. One account, not copied. I need to start being better at taking these trades. Because I think I do want to start. If I'm seeing NQ consolidate like that, I want to be able to take a trade off of gold or something else. Alright, so I'm going to take one micro long right there. We'll see if it's just going to reverse or not. But this is right here. We're still watching ES or NQ. NQ is just in consolidation right here, folks. So I'm not really interested in it right at the moment. Everything's on trade of 8. Everything's on trade of 8. Here's the position for those. That's looking for a long position, or taking a long position here.
Order submitted.
Alright, putting my stops in. And my target on that is going to be... there's multiple targets. I think the low-hanging fruit target... I think you got to go for London highs on gold. I mean, you might not get it. You got previous day equilibrium. I would be your first target. 303. We'll see if it wants to go there. Again, this is for every tick. It's $1. This is the micros, not. This is me learning to trade more of gold, not to try to really make any money with it right now. That's not my goal. My goal is just to get familiar with it, read price action, read my models. Does it play out as I want it to, as I plan on it? Because it's a different instrument, and with different instruments, it takes time. My primary is probably will always be the Nasdaq, but we're not doing anything in here, and I don't want to take that. Johnny, GCQ5 for me, waterfall, but that is zero charge for my trading. For the 3 p.m. model, what times is the low of day presented? It's after 9:30 market open, right? Or can you find low of day the day before? No, it needs to be current day. Current day, day of low. That's the rules. I went long. Patel. I went long on gold. One micro contract, looking for it to hit previous day equilibrium. And a short. So you held through all of this consolidation. I'm not a fan of consolidation. One second, folks. Lucrece, you left the oven on with something in it. I need to leave. You left the oven on with stuff in it. I told Jaden to watch it for me. He forgot. I took it out for you. My wife has been on a health streak right now. She usually is. But this one is different because she's making a lot of her own food. And so she's trying out new recipes, and they're actually, a lot of them are really good. No, John, you got a great point. The market, I think, hit its target, all-time highs. So I'm expecting it to be choppy like this. I'm expecting the chop. Here on gold, if you go to like the 30-minute time frame, I like the idea that we swept these lows down here. And we had some displacement moving the other direction. And I think that we could see higher prices from that. The only concern is unless it wants to reach lower down here, which you guys can't see it on my screen. I'm going to take that off. I'm in the trade right now. If I do anything else with it, I'll let you guys know. But my stop is at 32.95.60, 32.95.6. And my target is 33.03 for gold. So my hope, based on my analysis, is we swept liquidity here. It also is a breaker. So with the sweep and aggressive nature moving the other direction, also having these relatively equal highs right here, that price is going to want to make them jagged. It's too smooth. So I see price moving higher. That's what I would want to see. And from here, it could retrace and continue. But I'm not looking to play the retracement. I just want to get that initial expansion. All right, so as we've been sitting here, NQ has made this low resistance liquidity. It has ran and retagged London low and has refused to go higher. So as we come into the 11 a.m. macro, I'm watching to see if price wants to continue to move lower. There is no structure here that I can really do anything with still, but it's forming low resistance liquidity opportunities to the upside and also equal lows to the downside. So it's still 50-50. The question is which direction does it want to run first? If it runs this direction and it loses ground, that's an opportunity to take a long. If it runs this liquidity here and then loses it, that's an opportunity for a short towards these equal lows. Now, it may not want to give the manipulation. And if it doesn't give a manipulation, then we might not have a trade idea altogether. If it runs the liquidity here and just does one of those, we might miss it. If it does one of these, we might miss it. You see what I'm saying? So we just got to pay attention and see how price moves. These are gluten-free. I'm not sure what they're made with, but I don't eat gluten. To be honest, I like the idea of going lower on NQ, but I could see us pumping higher too. Yeah, sometimes it just doesn't do it. Today could be one of those days because we already hit the target that it wants to range up and down, giving it that opportunity to hit those levels. So if it's going to do that, we just need to see some sweeps of liquidity that would give us that opportunity. Right now, gold is not going in my direction right now. Yeah, that's why I'm not looking for big moves there, John. Just trying to get a piece of the pie. I could see the bullish move right here, sweeping all of this, refusing to take out this low, and then aggressively, when you start seeing multiple fair value gaps in a row, that's your sign that there's an opportunity coming. I'm watching gold to see if it actually finds support at this breaker right here. Did you guys see that? Do you see how we closed right on it? We were below it. but then we closed on that level. That's not a clear indicator that prices are moving the other direction, but it is a sign for sure. I'm going to rinse this out real quick. Time flies, John. Time flies. For those of you just joining us, we are in a trade in gold. Nothing of large size at all. That is our current trade idea, looking for price to hit equilibrium. I don't do anything with pennants. It could certainly drop here, but it could absolutely go the other direction. And considering ES hasn't hit its all-time highs yet, I like the idea of going long more than I do short. ES hasn't hit all-time highs. Doesn't NQ look like a bearish pennant? What does that mean? It goes long? Honestly, I have no idea if that's what that means or not. All right, 11 o'clock, 5 minutes away. We are in the macro with nothing happening right now. What am I buying? I bought gold. We're taking a small long, very, very small. I don't trade gold. And I want to get more into trading gold. So I took a very small trade just to see if I am having the right analysis. You got to get comfortable with new assets. So you just don't jump in and trade full size. So my trade idea is we swept 30-minute swing low right here. We created relatively equal highs. We have a bullish breaker right here, and we go and run that. That's the idea. Well, I traded gold. I don't know what you're trading. There's no 610 in gold right now. My purchase price was $32.99, around 32.99.5. There's my position right there. If the Nasdaq goes lower, gold should probably work, because they typically go in the opposite directions. It's not something that you should be like, oh, gold's going long, so I'm going to go short on Nasdaq. Don't do that. That's dumb. We could absolutely dig deeper into this hourly fair value gap. Like I said, I'm not really interested in going short right now because ES has not grabbed its highs, all-time highs yet. I would rather see this followed by clearer price action. Will I? Yeah, once we break out of this range. But we haven't broken out of this range. I need to see it break higher in my direction before I'm willing to move my stop loss. I've already accepted that if I take a loss, I'm going to take a loss. That's part of the trade. I think I have a tendency of moving my stop too quickly when trades are consolidating, and I really need to allow it time to leave before I move my stop to break even. All right, well, something's going to happen here. 11 o'clock. We're probably going to sweep these right here. Let's see if it doesn't. It's definitely easier not to move it when you have low size. Your emotions aren't as involved. And it's a good muscle to strengthen there, vintage trader. Even with small size, you're exercising and building that confidence that, one, you can hold, and you've seen it work out, and two, that allowing your stop loss to be your stop loss and accepting that loss is also building that strength that, hey, this is a business transaction. I'm going to let it play out. So here is gold's move, in my opinion. I think gold's going to move right here. At least that's what I want. Target is 3303.9. Should move that up here. There's the trade again, still in that trade. We'll keep it on screen right now. I think we're going to get close to hitting it. Why don't I have a line there? What the heck? I don't understand that. All right, so what I don't like on gold right now is that we ran and really went into those highs and closed red. I'm not a fan of that. It's still a valid trade, still valid setup. Still, it's not invalidated. I don't like that look. How do I get those indicators? Yeah, different indices have different margins, and it's based on volatility. Yeah, vintage trader. My target was the midpoint of the previous day range on gold. Okay, we've hit it once, but basically from previous day high, previous day low, there's the midpoint. That's my initial target. Could it go higher? Absolutely. But again, I'm not trying to, I think we're somewhat consolidating, so I don't want to try to get a huge trade and miss out on my exit. I also like here, if we look left, gold has a volume imbalance and fair value gap right here, overlapping with that previous day midpoint. So I like that. It absolutely could go towards these, but I'm just looking for potential low-hanging fruit objectives, if I'm right. Peter, I'm in a long on gold right now. Looking for it to hit this level here. On NQ, we're sitting waiting because we've been inside of this consolidation range for the last hour and a half. And we're going to wait till we get out of that range before we do anything. How did I buy NQ at 610? Are you talking to me, John? I don't think I bought NQ at 610. Oh, I need to say happy birthday to 2 kids. Are you guys leaving? My entire family is standing right outside my door. 2 of my niece and nephew are leaving, so I had to say goodbye to them. Yeah, Peter, you're 100% right. That's why we haven't taken anything since that 230 entry or 932 entry on NQ. Uncle Tyler, that's right. Got lots of nieces and nephews. I have 3 boys, 13, 10, and 9, and no girls. So my nieces get all my attention. Yeah, vintage trader, that's part of the game. It really is. As you become better and better, you'll learn to either call it a day sooner, or when you do take a loss or stuff does happen, you find the better trades eventually, and you make up for it. When you're waiting for consolidation to end, what are you looking for? For it to leave. To leave the consolidation. So you take the highest swing to the lowest swing, and that's your consolidation range. So in this case, from this low to that high, that's your consolidation. Look how much of that price action is around equilibrium. Equilibrium is right there. The red dots, the red dashes. That's equilibrium from this price range. All right, so see how we're getting that aggressive candle you're not taking it yet. You could take it. If we get this inversion right here, that's not a bad inversion to these equal lows. Because we did sweep a little bit of liquidity, but we didn't close. We closed right at equilibrium. That means it's a no trade idea, not doing anything. Gold is in drawdown right now. Hasn't hit my stop yet. We'll see what it's going to do, if it's going to turn around or continue lower. But these two candles right here tell me there might be an opportunity for price to leave this consolidation. Peter, I don't have one right now because we hit all-time highs. I don't know if it's going to go higher or lower. I'm looking for indicators in price on the lower time frames to help kind of with that. But right now we're in consolidation and it could go either way. So your job is not to guess. Equilibrium is the midpoint of a range, Johnny. So if I go back here and I put a border around here, and I make it red, this is that border, okay? This is the border of the consolidation. The low to the high and everything after that. Price has been inside a consolidation. Look where the midpoint is. Where is price crossed and spent most of its time? Right around here. That's an indication that you're consolidating. So I'm waiting for price to leave this box or to wick outside the box and aggressively move the other direction, and I'll take that long somewhere there. Yeah, we could run down there. That's a possibility. We'll see if it wants to do that. I'm about to get stopped out on my gold position. All right, stopped out on gold. Did not have the right analysis on that. We're going to go back to NQ here. Also, when you see this consolidation, it might be a good idea to size down also, because your odds of being wrong are higher in high resistance consolidation periods compared to when it's trending and moving aggressively one direction. I'm going to be mad if we sweep that low where my stop was and we run to the target. All right, so look how we swept these lows in consolidation, but we haven't expanded from it as of yet. Nothing looks good here, guys. To be honest, outside of the 932 trade, we might not be taking another trade here today. Yeah, I for sure think that, Peter. It just so I could have had the right analysis. It just decided to sweep that low before continuing. That's a indication of high resistance liquidity. It runs for these lows, goes the other direction, sweeps highs, comes back down. It's just this back and forth as it slowly moves towards the target that we had in mind, right? Are you talking about this fair value gap right here? Not necessarily. It can do that as an initial retracement. So if you understand how price moves, you have expansion, and from expansion you can have either consolidation or retracement or reversal. So here we had retracement into consolidation. From this point we can expand this way, we can expand this way. So from consolidation comes expansion. We just don't know which way it's going to go. You can use higher time frame analysis to help picture and determine that. And if you do it based on pulling out to a higher time frame, hourly perspective, it looks as if it wants to go lower, but we have this large hourly fair value gap right here. That's going to take a lot of energy to get lower, especially after this aggressive retracement and explosion to all-time highs. I could see it easily finding support here. Maybe it wants to do this. But I do think that we don't run, and I don't think we inverse that hourly BISI. Oh, isn't that convenient? Gold is running back. So this is what I'm talking about as far as gold goes. I'm not familiar with how it moves. And so when I'm taking a trade, I took a very small position to see how does it move. And can I get familiar with it? I still think we're probably going to run for that level. I wouldn't mind taking a long right here, to be honest. I'm not going to do it because we're in consolidation. And technically, we didn't sweep the low of the consolidation. We just swept internal consolidation. Look at that. Oh my gosh. Gold, I want to slap you. Why wouldn't we trade tomorrow, Peter? Am I missing something? J-Pal? I don't care if he's speaking or not. I mean, I'm not going to trade while he's speaking or his initial conversation, but if I see a setup, I'll take it. So apparently I had the right analysis on gold, but not a proper stop loss. Lesson learned. Lesson learned indeed. This candle was the reason why I was considering taking a long right here. In high resistance liquidity, once we sweep lows, we tend to run the other direction. See how we swept this internal high and ran the other direction? Sweep internal lows, potential run of the other direction. It's a little risky, and it's contrary to everything that we think. But when we're in high resistance liquidity, like we're seeing right now, you have a better chance of success by going the opposite of the expansion. Going opposite of the expansion. Way to go, James. I don't see a fair value gap in there. There's a fair value gap up here. And if you're going to do that, so James, I'm going to give you, for those that are watching, let's just say you took a long right here, right? Long position right there. Great, you got 10 handles. When would you consider getting out? Well, with the idea that we could be going, we don't know which direction we're going. Maybe it's just a quick retracement and moving lower. I would do the midpoint of that price leg from high to low. That's where I would take my target. So midpoint is right there. Look how it wicked that midpoint. This is a Fibonacci tool. This is another fib targeting tool. When we're in consolidation, you target the midpoint. So look how we hit the midpoint and we kind of stopped. Midpoint of this price or this dealing range right here. Very small dealing range inside of the consolidation. Entry here, target there. That would have been 14 handles. Quick, easy scalp. Folks, I don't think anything's going to happen in the AM session. I'm probably not trading the noon session because I have another birthday party to go to. I probably will take a look at the PM session today. We took one trade on the Nasdaq for a win, and I did a test trade on gold as I'm trying to understand order flow on gold a little bit more, just to expand my opportunities for trades, especially if we're consolidating like we are on the Nasdaq. So, I mean, I'm green. I'm green like $50, $60 on multiple accounts. So it's not a complete waste of time, I guess, is what I'm saying. Green is good. So we're going to leave it at that. We'll be back here tomorrow, 9:15. We'll be back. Stay safe, guys. Don't do anything. This is not the day to try to master your understanding of order flow, because consolidation and high resistant liquidity days are days that just create frustration. It creates questions in your mind of thinking, maybe I really don't understand this. No, you probably do. Excuse me, you probably do. It's just today's not one of the days to actually refine your model. It's just not one of those days. So learn to walk away. That's what I'm going to do here. Probably come back around 1 o'clock, see if anything shows up. Instead of doing this, back test. Go and start back testing. Okay? Other than that, guys, God bless. Stay safe. And we will see you all tomorrow. God bless. Bye-bye.